You're listening to The Intellectual Investor, episode number 89, Accent Podcast Interview, Part 2. To listen to more episodes, visit investor.fm. To learn more about Vitaliy's investing firm, IMA, go to imausa.com. Accent Podcast Interview, Part 2. In Part 2 of my interview with Aznaur Midov on the Accent Podcast, we continue our discussion on investing and life. I explain how time can slow down when investors face a loss and what to do about it, how investing is evolving, the difference between work and productivity, and a personal finance hack my wife and I use. I end with a story about my time in the Navy and my favorite country to visit. Hint, it's not a country. Enjoy.
So let me tell you what I learned from this. When you are losing money, time slows down. And every day of losses becomes torturous. So what I learned is that, and so if you zoom in and you look at the stocks on a daily basis and you let this kind of daily losses to get to you, I was just happy to make money on the stock and to get out because that experience of owning for a year and not making money got to me. Mm-hmm. Okay, so now when this happens to me, I try to zoom out. So the reason we made the mistake because it was a mistake. It was it's not that the stock went up because it went up for the right reasons. It went up for all the reasons I described when we bought it, and we sold it too soon. If I looked at the next 3 to 4 years out, but I was just exhausted from owning it. Mm-hmm. So now when I have a company and does what electronic arts does, which happens quite often, I zoom out. Like if I still analyze the company, but I try to mentally zoom out, kind of look at it from a much larger perspective and say, okay, well, 3 to 5 years out, what is the value? So that was one of the most important lessons for me.
You've been in the investment management industry for some time. How do you see it's changing?
So it's kind of interesting. It's getting dumber and smarter at the same time. Every time somebody buys a index fund, the IQ of my industry declines. Right? Because by definition, index funds are dumb, right? It's not when you buy an index fund, you say, I just want to buy everything.
Yeah.
Okay. So on one side, it's getting dumber, and at some point, active investors are struggling because of that. But at some point, it's going to revert, and money is going to come back to active investors because right now, when the market is going up, there's self-fulfilling mechanism in the index funds construction that basically benefits companies with larger market caps. At the same time, I think we're going to go through a transition where value investing that's done by recipe mindlessly, I'm buying stocks that trade at 10 times earnings or less, it's going to be incredibly difficult to make money in doing that kind of value investing. Yeah, I'm working on this book, which is called The Intellectual Investor. And when I say I'm working on this, I'm writing it for me. So my first book, Active Value Investing, I wrote it for my competitors. Basically, it's 250 pages, 75 charts and tables, a lot of words, big words. The second book, which basically the little book of Sideways Markets, was my first book, kind of simplified and written for your neighborhood dentist, somebody who is smart, educated, but is not an investment expert. Mm-hmm. So, but this book, I'm literally writing for me. The purpose of the book is to make me more creative and to make me a better investor. So when the time comes and I start competing with algorithms, kind of AI, I'll be prepared for that. So that is kind of the purpose of the book. And since I'm writing for myself, there is kind of no deadline. I'm done when I'm done,
Do you intend to sell it at all? Because you're saying
no. I'll sell it, but let me explain what I mean. So when you write a book, there is a deadline. When I wrote my books, there was a deadline, and I had to get it done by those deadlines. Mm-hmm. This one, I'm really writing for my enjoyment and for my exploratory kind of journey. It's kind of interesting. Focus is not always a good thing, or deadlines not always a good thing. Because what happens if I had a deadline? I said, I had to get the book done by January 31st, 2021, then I would be focused to get it done. And what would happen, I would miss out on things. I would be looking only straight. I would not be looking left or right. And it would be missing out on things. So this is why me not having a deadline allows me to be more mindful and more creative and looking at things that I wouldn't look otherwise. So that's why I kind of refuse to set a deadline for myself.
Mm-hmm.
I think at some point my wife will get sick of me working on this book and say, just get it done. But, we're not there yet. So
how do you manage time between investing, writing, and family? Because investing on its own, it's a very competitive game. You compete against some of the smartest people in the world, probably, right? Yet you find time to do something else.
A couple things. So I get up at 5 o'clock in the morning, and from 5 to 7 o'clock or so, I write. So if you think about it, I'm probably write about 14, 15 hours a week just by doing that, which is probably, if you do it over it's probably 700 hours a year. Mm-hmm. That's, most people spend a small fraction of that writing. Then I come to the office and I work from 8 to 4, and then I go home and spend time with kids. And then I also read a lot. What I learned is that not about how many hours you work, but it's how productive you are with working. Mm-hmm. I'm struggling with this just like everybody else does. But I try extremely hard to kind of create this oasis where I can work and try to block out distractions. I don't look at our portfolio like more than once a day. And this is not because I'm indifferent what happens to my stocks. It's just because if you look at it on a continuous basis, all it does, you just look, first of all, you're seeing, even I probably shouldn't have been looking at it once a day, but all you're seeing is just randomness and just distracts you from what you should be doing. Also, my oldest son is 18. My two daughters are 13 and 5. And I'm extremely conscious that I really want to spend, they won't be young for long. My son is going away to Israel this Sunday. And that actually, I cannot tell you how much it hurts. Oh, it's not, I'm not concerned about him going to Israel. I'm not concerned about him. I'm concerned about me. I'm concerned about me because I'm going to miss him so much. But that makes me appreciate my younger kids even more. So I tried very hard when I'm at home to be present. I'm just like everybody else, work in progress. But I'm aware of that at least. And I read somewhere that attention is the currency of time. So I can be at home, and if I am just, I don't know, if I'm just sitting at the dinner table and I'm looking at my phone, am I really there? Physically, I'm there, but if I give attention to my kids, then I'm there with them. And then I try to read as much as possible and try to read in diverse subjects. And in all fairness, for me, this is not a job, but this is kind of a hobby in the sense that if tomorrow I didn't have to work for a living, I would still be doing the same thing. So it's in a sense, I'm doing because of out of love, not because I have to.
No, one thing I wanted to ask you about, you've been in the industry for a long time. You've been investing for a long time. You've written the books on investing and building wealth pretty much. And there is the whole industry that are full of people who I believe are not really qualified to give this financial advice. What would you recommend to young people who are not value investors themselves and not in investment business in general? How would you recommend them to build their wealth, let's say?
It's funny you say this, and I don't mean to be self-promotional, but this week I just wrote an article that comes out on this subject. I wrote this article for my son, and I don't write articles on personal finance because in general, personal finance kind of bores me. Taxes bore me, etc. So I'm just kind of stocks are us kind of guy. So I'm really passionate about investing. But when my wife and I got married, a friend of mine, Mark Bauer, sat down with me. That was his gift to me and my wife. He took us out to lunch and said, "Here's my advice to you: create a budget." And I was a little bit offended because at that point I had a master's degree, I had a CFA. And he said, you don't just put on this, so you have your revenue, you have your income, you have your expenses, how much you spend on food, on groceries, on the rent, etc. But what I would like you to put there is think of the future expenses you're going to have. The expenses that happen kind of in lumpy, like sometimes some of those expenses will happen in the future, far away. Some of them happen every 5 years, but we just don't think about them. So guess what? Most of us buy a car every 5 or 10 years. So you may not need to buy a car today, but 5 years from now, you're going to need a car. Don't let it to become a surprise for you, because when it becomes a surprise, it means you borrow money to buy it. Mm-hmm. So he taught me concept of sinking funds. So we literally, my wife and I, after the sit down, we created the budget. We thought of all different expenses. Like, I'll give an example. Like, we wanted to buy a new TV. So we put a TV in the sinking fund. We realized that at some point we're going to have emergencies. We're going to have emergency funds. So we basically created a budget that had sinking funds. And therefore, the amount of money was left over was a lot less than we thought. So my wife and I never we had plenty of other disagreements, believe me, but we never had disagreements about money because we were kind of on the same page with that. One thing I learned is that how much money you make has very little to do with how much money you have saved. It's all about your expenses, right? And so I encourage your listeners to read my article because it goes into depth about that topic. But the point is this. So it's not just about making money. It's also how you spend money. And I think budgeting is very important. Okay. And one thing budgeting does, it helps you prioritize what matters. Mm-hmm. One thing I learned that in life, we do things by default. Like we do things because we do things. We just don't think about it. It happens automatically. It's kind of a default settings. And then you discover it in the hindsight, maybe I shouldn't have been doing that. I'll give you an example. You may value travel a lot more than you value having a new car. But time comes to buy a new car and you spend hundreds, I don't know, $50,000 or $60,000, whatever, on the car. And then what it just happened is that the monthly payment, for the car, it just took away money from your travel budget.
Okay, I see.
So what happens is that now you can't travel as much as you'd like, or if you do, now you're basically going in debt. And so therefore you made a mindless decision because you didn't think about it. So budget helps to prioritize what matters to you. And therefore, when the time comes to buy a car, you say, well, you know what? Yeah, maybe I'll buy a used car. And the money I save, that allows me to have an extra vacation a year, as an example. So anyway, but that's not what you're asking me. So that really comes down to savings. About investing, I would, if somebody wants to learn investing, I would take as much money as you can afford to lose, and I would start investing like in very few stocks. Because when you invest in this, especially if you're in the beginning, you're going to make mistakes and you're going to make very painful mistakes. So you may lose money. But also when you make these investment decisions, it's very difficult for somebody who's starting out to build a portfolio, because to build a portfolio now you have talking about, I don't know, 20 stocks or so. Mm-hmm. And it's very difficult for somebody to follow this many stocks at once. So when you buy those few stocks, all you're trying to do is to learn how to analyze companies. And more importantly, you learn about your emotions, because investing is a lot more than just analysis. It's about dealing with your emotions. I gave you that example with electronic cards, right?
Yeah.
To me, that was a lesson, not an analytical lesson. That was a lesson of how I should deal with my own emotions and how I should zoom out. It has nothing to do with kind of analysis itself. Okay. So anyway, I would look at it as your tuition and just, take a few $1,000s and start investing little by little. And if you lose that money, think about it as, you just took a few classes at your overpriced university. That's how I would do it.
Vitaliy, you immigrated to the United States from Soviet Union.
That's right.
Looking back on your childhood, was there anything that would show that you would become an investor in the future?
It's a good question. So when I was in Russia, I went to Marine College, which is a technical semi-military school. So I was a cadet. Yep. I wore a uniform. You know the story, right? Yep. Let's see. I wore a uniform. I had a commanded officer. I had lived in barracks. And basically, I subjugated myself to that because I didn't want to join Russian army. At the time, parents did not want their sons to go to Russian army because it was not like going to 2 or 3 year prison. I understand that this is not the case in Russia today. So, but at the time, that's what it was. Yeah. So nobody wanted to join Russian army. And so I was in this school and I was studying mechanical engineering, and I absolutely hated every single class I took because I wasn't really there because I wanted to be there. Because I had to be there. I think the only class that I did well was economics. So that would have been probably the first hint that I may have, that's a class where I just aced it without any kind of effort. It was like something that came incredibly natural to me, which is physics didn't or biology didn't. When I thought of investing, I remember vividly when I think I saw Trading Places, and I saw that. Remember the scene where they trade orange futures or whatever in the Trading Places. I thought that's what investing was. People throwing papers up and trying to buy stuff in this kind of chaotic place.
Very assertive Wall Street, basically.
Exactly. So when I was in Russia, I guess I did not know what investing what really was. And so because remember, I grew up in a Soviet era, like where private businesses did not exist for the most part. So I knew nothing about investing. So when I left Russia, I did not think that I would become an investor. Me becoming an investor was a completely accidental experience. I was very good with computers. And the reason I was good with computers is because when I moved to the United States, my parents bought me a computer and I was playing with that. And at the time, I was like, some people collected like CDs, books. I was collecting software programs. I have no idea why, but I remember a friend of mine and I were trading. I gave him a floppy disk of this software, and he gave me a floppy disk of that software. I have no idea why I even needed that. But anyway, I did not been good. And this is early 90s, been very good with computers. I knew how to, and this is before Windows. So this was, still, we had DOS. So I knew kind of DOS operating system fairly well, which at the time was, believe it or not, was a skill.
Yeah.
So I got a job at the investment firm helping them with computers. What was interesting, so now we already have Windows at the time. They needed to write a database in Microsoft Access. And I knew nothing about Microsoft Access, but at the time, Microsoft had a free technical support, unlimited technical support. So I remember spending like 5 hours at a time with a Microsoft engineer, and he basically teaching me how to use Access. But when I was there, in addition to learning Microsoft Access, I learned how, they had a Bloomberg terminal. I started playing with Bloomberg, and I really liked it. So I changed my major to finance, and that's how I got into investing.
And you started at investment management associate right after.
Actually, I started at a different firm, but they did not need an analyst, so I ended up leaving for IMA. Yeah.
So you started as an analyst though, and you became CEO.
Yes.
Give advice to young kids how to get from analyst to the top position.
I'm not sure I have an advice. I fall in love. I mean, I fell in love basically. I love what I'm doing. So because when you love what you do, you're going to spend more time on this subject than somebody else who doesn't.
So you outwork everyone because you really liked what you do when everybody else probably wanted to go home.
That's right. Yeah. So this is one of those professions where if you do it for money, you get outcompeted by people who do it for passion.
Oh, I see.
Love.
That's
okay. So if you just doing it for money, then it's the wrong profession to be in. Because you be competing against people who, like Warren Buffett, who only doesn't care about money. Yeah. For him it's a puzzle. So
what I have now, Vitaliy, is like quick blitz. I'll ask you a quick question and you will give me a quick answer. How does it sound?
We can try. I mean, giving quick answers is not something I'm usually, but we can try.
So what's your favorite movie?
Get Shorty.
Favorite movie star? Danny DeVito, I guess.
Danny DeVito would be one. Yes, he's at the top of the list. Yes, absolutely.
Your favorite singer or a band?
Queen.
Queen. Oh, here you go. Your favorite book?
Nonfiction would be probably Fooled by Randomness or Subtle Art of Not Giving a Fuck. So that's
I saw you were talking about this book very.
I apologize for the title, but I didn't write it, so
I saw your very detailed review of the book, and it's actually very interesting. I agree.
It had a huge impact on me. I think it's one of those books that I would highly recommend to anybody. Just ignore the title, get over it, and read the book, and you'll see that title kind of cheapens the book a little bit.
Yeah, I see. What's your favorite thing to do?
Outside of investing, probably spend time with kids, listen to classical music.
What's your favorite place in the U.S.?
Denver would be number one. Mm-hmm. Southern California probably number two. Sorry, to Northern California.
Yeah, I'm like, oh God, I feel bad. Okay, What's your favorite country to visit?
I understand Europe is not a country, but in general,
Yeah.
I love Europe. I learned this year that I love Switzerland. Almost, pick any Western European country, Switzerland, Italy, I love them all.
Who's your favorite historical figure?
Nelson Mandela. I visited South Africa twice, and every single time I'm blown away by what he has done. What he has done was so selfless. After spending, 29 years in jail, in prison, he comes out and there's absolutely zero resentment, and he unites the country. When you think about historical figures, you think of them usually, it's very few people can transform in a country in a positive way.
Yeah.
A lot of them can do it in a negative way, right? Look at what happened in Zimbabwe. Look at what happened to Germany. Look at what happened to Soviet Union under Stalin. So it's very easy to do. It's very easy for historical figures to transform a country in a negative way.
Yeah.
But Nelson Mandela, to me, what he has done is absolutely phenomenal. So hands down, Nelson Mandela.
Got it. What's the first item on your bucket list?
I don't have a bucket list. I just live.
It was a very quick answer. Nice.
Yeah.
Do you have a favorite quote?
Yes, this one applies to investing a lot. But I'm sure they have other ones. But this one is misattributed to Yogi Berra, but it's actually somebody else said it. In theory, there is no difference between theory and practice. In practice, there is.
Yeah.
And I think some mathematician said it, and I forget his name. But I'm sure I have other ones. But this is the one that comes to mind. Quick.
Yeah. And the last question: what life advice would you give to young people today?
Career advice, I would say, do what you love, because life is too short. And life advice is be kind. A lot of times we focus on being right. And a lot of times in the quest of being right, we forget to be kind. And, we often destroy a person through that. I stop myself often in conversations where I feel like if I go further, I'm going to hurt the person. So I try to be kind and, not being right.
Got it. Well, Vitaliy, thank you very much for the advice, and thank you very much for the podcast.
It's my pleasure. And I love that, the name of the podcast is The Accent. Now your listeners get 2 for the price of 1.
Thank you for listening to The Accent Podcast. For more episodes, please visit theaccentpodcast.com. Until next time.
Thank you for listening. This and other investment articles by Vitaliy Katsenelson are based on value investing principles that were first brought down from the mountain by Benjamin Graham and later were popularized by Warren Buffett. To learn more about these principles, visit investor.fm and listen to the first episode of this podcast, titled The 6 Commandments of Value Investing. To learn more about how Vitaliy's investment firm uses these principles to create low-risk, long-term oriented portfolios, visit imausa.com. Enjoy life and prosper.